Hey guys and girls, Nathan here, just as always on your Tuesday night for some entertainment. So just wait for everyone to hop online and join me. Got lots of cool things to talk about. Today, I want to answer a lot of questions. So if you guys want to post up your questions that you've got, send over the question to the hotline where I read from. Some of the questions and that, feel free to keep them coming through. Today, I want to focus on a fair bit of news that's coming out and talk about, what is actually happening in in the financial markets, right? A lot of people are saying, "Look, Nathan, you told me that maybe the stock market might get hit around September, October, August, that sort of period, which we haven't seen any major stock market crash or retracement, which is interesting, and that's going to be one of my topics of discussion today. So, question being is, why is the stock market going up so high? And that's going to be one of the things we talk about shortly. Yeah, thanks for joining me. So, getting to my news. So, one little thing. This one was sent in from Andrew to the phone. This was an article here from Victoria. Congratulations to everyone from Victoria that's allowed off house arrest for whatever is being changed down there this evening. Um, yeah, I heard that in the news. Crazy times, though. This here is a thing that says 1990 versus our state in 2020. So just some of the things are a little bit different. This was in Victoria. Um, However, it could be, the same thing could apply no matter which state, which country you're in, and these things are becoming a more systemic and global sort of concern. Thanks for the heads up, Michelle. Just got the fresh cuts straight from the hairdresser to home to do this broadcast. So yeah, looking at the average weekly wages in 1990, it was $525 per week, and now it is $1,714. So that's a jump of sort of three times what the wage was back in 1990. People might sit there and go, well, that's just what happens. There is some manipulation in those numbers of where the wages come from. There's more people working now. Household incomes used to have one person working. Now there's two people enslaved. Medium Melbourne house price. And this is where a lot of people tend to draw their attention to. They say, well, the house price versus the income hasn't changed. So the house price has gone up. So it says here 1990, the medium Melbourne house price was $131,000. The medium Melbourne house price today is $881,000. So it's about seven times what it was back in 1990. So a house in Melbourne used to be 131 grand in 1990. 30 years later, it's 881. It's about a seven times multiplier, six and a half, seven times, just off the top of my head. So we've got the wages that have gone up three times. We've got the house that's gone up seven times, eight times, six times, whatever it's gone up. So a lot of people sit there and say, well, it can't be expanded any further, right? How can the house prices are in a big bubble, right? And if you looked at it primarily just from those numbers, then you would see it being in a bubble. The house prices have gone up and the wages haven't been able to keep up. But there's a difference. Interest rates back then were 15, 16% at that point before they peaked out around 18, 20% in the early 1990s. And now they're down to not even a quarter of a percent anymore. So our beloved trusty chart that I show you, the 30-day cash rate future implied yield curve, is now sitting with the lowest point I've ever seen on it at 0.25. So 2.5 of 1%. So 2.5% of 1% is where the low point of this cycle is hitting at. So yeah, where's interest rates going to go? Was it the house that went up for everybody, or was it the money that was manipulated? And that's the question that I ask everyone. Most people think, Oh, Nathan will be sitting here talking about, oh, house prices will go up. All those people out there in the property space, house prices go up. Here's a property clock. When someone pulls out a property clock, just means that they don't know what else to talk about. They just have this like little flow on chart thing. But when you look at the root cause of why, things move in the economy, why this article here, I can see there's more people checking in. Article from 1990s versus 2020. Why is it changing? Why is the house price up 7 times where the income is up 3 times? Um, it's because they've manipulated the currency and it costs a lot cheaper to hold on that same asset. So, if that's what we've seen looking back in the rear vision mirror, what will we see looking forward? And we'll be looking at from where we're sitting today and the measures that are being taken. That is the most important, the most crucial part, because these are things that I was very, boisterous about back in 2016. I said we're going to see a global financial depression of biblical proportions, and I would say where we are today is of some form of biblical proportion that you would read about. Let's go on and see what else changed in the last 30 years. This is just using Melbourne. It came from an article that got sent through to me. Melbourne population 3 mil, now 5 mil. Victoria population 4.38, now 6.69. So it's gone up 2 million people in Melbourne and Victoria over the course of the last 30 years. So it's up about 50% increase in 30 years. What will it look like in the next 30 years? They're going to keep bringing more tax slaves into the country, and we'll talk about that shortly, because the only way for us to stop ourselves flying off a cliff financially is to open the floodgates to immigration. Article that I want to read to you from the World Economic Forum back in 2016. I only got to see it today for the first time. I never saw it in the past. I did very carefully document all of this previously in 2016. So without even seeing that. Australia's population in 1990 used to be 17 million, now it's 25 million. Faith and new Victorians, doesn't really matter. Work, the number of households where both parents worked was 42% versus now 61%. Right? So back in 1990, you could have less than half the families out there had a mum and a dad working. Now, most of the families, or 61% of them, so it's gone up by 50% the amount of people that work in a household. So just because they're becoming more debt trapped, slaved into the system. The city skyline, the old docks area, industrial areas, there's yeah. I think really, as I see, back then we used cash. Now we use tap and go. Soon you'll be using Mark of the Beast in your hand or somewhere. Do you ever find it weird when we walk into a shop, they point the the thermometer with the whatever rays it may emit into your middle of your temple, into your third eye? That's fun, interesting. Um, yeah, interesting. So that was just an article that was sent through. I've got some cool stories that I want to talk about in the news. So I want to start off. Let's go straight to the jugular of the World Economic Forum um, website. This is 8 predictions for the world 2030. So you can go to the World Economic Forum. 8 predictions for the world in 2030. For those of you that are on Birch Feed, I'm going to send it over to you now so you can read along with me, show you wish. There you go. It's on Birch Feed. Ding, 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 ding. If you're not on Birch Feed, make sure that you subscribe. It is free. Don't be a tight ass. Doesn't cost you anything. Just go and subscribe at birchfeed.com. It goes in to say, as Brexit and Donald Trump's victory show, predicting even immediate future is no easy feat. When it comes to what our world will look like in the medium term, how we will organise our cities, where we will get our power from, and what we'll eat, but it will all mean to be a refugee. It even gets trickier. But imagining the societies of tomorrow can give us a fresh perspective of the challenges and opportunities of today. We asked experts from our global future councils. Who are these people from the global future councils anyway? For their take on the world in 2030. And these are their results from the death of shopping to the resurgence of nation state. Nation state, USSR, right? AUSSR. We're in Soviet state here. All products have become services. So this is number one. By the year 2030, I do not own anything. I don't own a car. I don't own a house. I don't own any appliances or any clothes, writes Danish MP Ida Ayuken. Shopping is a distant memory in the city of 2030, whose inhabitants have cracked clean energy and borrow what they need on demand. It sounds utopian until she mentions that her every move is tracked, and outside the city live swaths of discontents, the ultimate deception of a society split into two. Right? I only come across this afternoon. This is something we've been talking about for a very long while. It might sound messed up to a lot of people, right? You won't see this on the news. Who controls the news? Who owns the media outlets? Who owns the streaming of where you're watching this? Who is controlling your mindset, right? What clubs do they go to, right? I don't mean, seeing them on a Saturday night, got some, drinks there. Hey, ladies, what's going on? That ain't the clubs that I'm talking about these fellas coming from, right? What secret societies are they a part of? Where do these things get made up? Because this here is being put out there by some scholars, which, when it's talked about from crazy people, doesn't get much. It gets pushed back down. So basically, that sounds like a world where it goes, I don't own anything, I don't own a car, I don't own a house, the state owns it. It sounds like communism. Communism. Personal freedom, liberties, rights, gone. Well, 2. There is a global price on carbon. China took the lead in 2017 with a market for trading the right to emit a ton of CO2, setting the world on a path towards single carbon price and a powerful incentive to ditch fossil fuels. Head of Climate and Environment at the UK's National Physical Laboratory. Europe, meanwhile, found itself at the centre of the trade in cheap, efficient solar panels as prices for renewables fell sharply. I knew there was a reason why I was getting into solar panels. I knew there was. And cryptocurrency and investing and understanding how debt works, how currencies work, how money works, how the system works, how the media works, how the brainwashing works. It's important to go and educate yourself, guys. Number 3, US dominance is over. We have a handful of global powers. This one's interesting. Why is the US so powerful? The US is powerful because it's put on the stage to look like it's powerful. It does lots of deals with lots of people, whatnot, but it does have the most powerful thing, which is the money printers, and they can print off as much currency as they wish using the Federal Reserve. Nation states will have staged as a comeback, writes Robert Muga, research director at the La Grappa Institute. Instead of a single force, a handful of countries, US, Russia, China, Germany, India, Japan, chief among them, show semi-imperial tendencies. However, at the same time, the role of the state is threatened by trends including the rise of cities and the spread of online identities. Identity, right? Everyone's getting you in a digital world. How's your little commie app going that we've all been forced to download? 4, farewell hospital. Hello, home spital. Technology will have further disrupted disease, writes Melanie Walker, a medical doctor and World Bank advisor. Why do we have a World Bank advisor? And what is the World Bank anyway? Right? Talking about medical. Anyway, the hospital as we know it will be on its way out with a fewer accidents thanks to self-driving cars, which also you got no control on where you can drive. What will the self-driving car look like when they can track you and it's all digital? Has anyone realized the level of the new cameras out there, right? Understand how those cameras work with data and what they can actually do. Biometric cameras, biometric scanning, all your big shopping centres that weren't forced to close down have had them installed. They're in lighting. They can see groups of people, track those groups of people from their facial recognition. All those idiots with those dog ears on their Snapchat, not realizing how, you know, they're getting your facial data. There's actually a patent there to certain places. Who owns the patents for these things? What are they doing with the data? Anyway, um, I digress. Few accidents due to self-driving cars and great strides in preventative and personalised medicine. Scalpels and organ donors are out. Tiny robotic tubes and bioprinted organs are in. Printing organs transfer. Wow. Number 5. This one really, really crucial. We are eating less meat. We are eating less meat. Why? Why are we eating less meat? Rather than our grandparents, we will treat meat as a treat. That sounds like a tongue twister. We will treat meat as a treat rather than a staple, writes Tim Benton, Professor of Population Ecology at the University of Leeds, UK. It won't be big agriculture or little artisan producers that win, but rather a combination of the two, with convenience food redesigned to be healthier and less harmful to the environment. Please explain how that will be the case. Why do we need to do that? Right? Why are they forcing us? Why are all these rise of these certain companies? Why do we have certain celebrities that are in sort of certain groups going out there and promoting, this fake meat? Right? If you're going to eat fake meat, just go eat meat. Uh, Today's Syrian refugees are 2030 CEOs. Highly educated Syrian refugees will have come to age by 2030, making a case for economic integration of those who have been forced to flee conflict. The world needs to be better prepared for populations on the move. It'd be better to have a global sort of government to look after this. Um, Writes Lorna Solis, founder and CDO of NGO Blue Rose Compass, as climate change will have displaced 1 billion people. I thought they just started talking about Syrian refugees, but now climate change is going to displace 1 billion people. No, you need immigration and you need to be taken on refugees because you need more tax slaves entering your system, right? We need more people coming in the country so they can consume, so we don't have a blowout of our debt-based fiat Ponzi scheme that we have. 7, the values that have built the West have been tested to breaking point. We forget the checks and balances that bolster our democracies at our peril. Yeah, by the 2030s, we will be ready to move humans towards the red planet, talking about Mars. Good luck to them. Just interesting. Those worlds they talk about sounds very, very communist. I had someone this week write in from overseas. This person is not from Australia; they're from the US. AT&T, their child works selling phones. It appears that there was a new iPhone 12 come out recently, just in this last week, and there's been no sales since Thursday last week till today. That's like 4 days, 5 days without any sales of a phone, right? So imagine going down your local Optus or Telstra store. When those new phones come in, they get sold out on the first day. Everybody wants a new iPhone. They're all gone, right? But here we are seeing in some locations they haven't sold one of them for a week, and I think that says something very important, and that is that we are heading to a point where some areas don't have stimulus packages. So the packages have been removed. What will happen if we remove JobKeeper? What will happen if we remove JobSeeker? What will happen if we take away these stimulus packages? The only things keeping our economy afloat at the moment are these Ponzi scheme stimulus packages, and you know I don't know. I don't know if maybe someone can share with me if they are, here in Australia and they have, know someone that works in phone sales to talk about, let me know if, those phones are walking out the shelves like they normally would, or if they haven't had any sales for a week, right? This seems very odd, and I've got no reason to disprove or disbelieve why that would be the case, that they would make that sort of stuff up. So just interesting observation. My thoughts on that as soon as I saw it was that no stimulus packages, meaning no cash flow. The velocity of money turning around in that system is in a different sort of position where it's in a tightening phase. So um, talked about sorry, I just got here the little another article here that I want to talk about. I went to the bank the other day, just while that's loading. When I went to the bank, I wanted to get some cash out. And has anyone tried to go to the bank recently and try to get some cash out? I had to go to three banks, right? Three banks, like different brands of banks, to try and get some cash out. Um, what do you want the money for, right? That's the first thing they ask. What do you want the money for? I want my money. It's my bloody money. Why can't I have my money? Why do I have to answer any questions, right? So no, we can't give you, right? Try getting more than 10 grand, they won't give it to you. They don't have it, right? I had them go on and getting bits and pieces to go, oh, they're odd numbers that they're giving you because that's all they could help me with. And when I asked for the money, they said, are you under any duress? Are you sure you need to get this money out? Is anybody forcing you to take money off you? And for the first time in my life, I felt like I was a domestic violence victim or something, right? Like, someone going, "Are you okay? Is there anything you can tell us? It's a safe place here." It's like, I just want my money. You guys are a bank, right? You've got my money. It's in your account, right? It was meant to be my account, but it's in your institution. Can I just have some of that money so I can get on with my day and do my shit? But no, they're going to ask you a million questions and treat you like a terrorist and then flag you with all different systems. So just remember, when it's a digital world, which we're heading more and more into, it's not your money. It's in the system. If it's stuck in the system, it's always in the system. It's never yours to begin with. Right? The currencies are dying. What will happen on the other side of that? Time will tell, and it'll be very interesting to see. But all I know is going from this side of the system onto the other side of the system, it doesn't look too pretty. I want to carry as many assets as I can through that system. Doesn't matter if it's iPhones or was this a pair of headphones, right? Doesn't matter what it is. The more assets that you can take through, the better, because then you've got more things to barter and trade on the other side. This one is a very, very scary one. It's a very similar to the last article, and once again, it is from the World Economic Forum, and I posted in the Birch feed earlier. It goes on to read, "Welcome to 2030. I own nothing, have no privacy, and life has never been better." Yeah. All these commies, all the socialists out there in the world, guys, they all go, "Oh, I don't want to be a part of these billionaires and this and that, and these rich people shouldn't have money," and yada, yada, yada. Like, shut the up, right? But when you think about it, right, what these commie social sort of positions look for is they hate and despise people with wealth, but all they're doing is just aiding them as their pawns on the chessboard. Just reading that makes me sick, right? Welcome to 2030. I own nothing. I have no privacy, and life has never been better, right? Sounds like they're trying to sell me some commie fascist totalitarian system. Um, Welcome to the year 2030. Welcome to my city, or should I say, our city. I don't own anything, don't own a car, don't own a house, I don't own any appliances and or any clothes. It might seem odd to you, but makes perfect sense for us in this city. Everything you considered a product has now become a service. We have access to transportation, to accommodation, food, and all the things we need in our daily lives. One by one, all these things became free. So it ended up not making sense to own as much. Why would they be giving you all of this stuff for free? Right? You're watching this from whatever platform you're watching this from. Um, it's free, right? How many minutes of videos do you have to of advertising do you have to watch to get into this video? How many stuff do you get sold to you, right? You have no control of your life, right? You're owned by a corporation. You're a product, like the Truman Show at that point. Um, yeah. First, communication became digitalized and free to everyone. Then, when clean energy became free, things started to move quickly. Transportation dropped dramatically in price. It made no sense for us to own our own cars anymore because all we could all call a driverless vehicle or a flying car for longer journeys within minutes. We started transporting ourselves in much more organized and coordinated way when public transport became easier, quicker, more convenient than the car. Now I hardly even believe we accepted congestion and traffic jams, not to mention the air pollution. I was going to say environmental. The death of shopping. Shopping, I can't really remember what that is. For most of us, it has been turned into choosing things to use. Sometimes I find this fun, and sometimes I just want the algorithm to do it for me. It knows my taste better than I do by now. When AI and robots took over so much of our work, we suddenly had time to eat well, sleep well, and spend time with other people. Eat well. They're feeding you plastic. Anyway, for a while, everything was turned into entertainment, and people did not want to bother themselves with difficult issues. It was only the last minute that we found out how we could use these new technologies for better purposes rather than just killing times. Really, really, why would they write these articles? Why would they? Um, what else was there? Um, the elections, people keep writing to me. What do I think is going to happen in the election? Is it going to be Trump that wins? Is it going to be Biden that wins? Who's going to be the biggest winner out of it all? I reckon the biggest winner will be the ruling class, right? This ain't an election. They never are. They're selections. You can choose from this one or that one, but you don't have choice or freedom. You don't have choice of what they're doing. When they go into office, they sit there and they're like, yep, this is what I have to do. This is a story. It's just a system, guys. So it's choose from one or the other. It's not going to change anybody's life. Um, I do find it interesting. There's a bit of information out there about Biden's little slogan. One thing I saw right there, like they just roll this guy out. He doesn't. I'm not a Trump supporter. I met the bloke before. Seems like a normal guy. Whatever. Seemed like a gentleman. But you know, they wheel out this guy, right? He can't even string a word together, string a sentence together. The guy's crazy, right? But those little three red flags in China, it was actually a sign of the Communist Party, basically identical to that for communism. And yeah, I was listening to some articles beforehand, all the ads that are coming out in the US, let the government take care of you. Let the government vote for this guy, right? Vote for this party. There's communism. So we're getting it jammed down our throats, whichever way we look at it. You can take from the toughest guy off the street, which is the government, in all, terms. But, do you want to be that person that has to go at mercy and say, yes, I will sell myself to the mark of the beast. Give me my digital ID. Give me my money that I can have for free. Please let me buy some food. Please let me into your shop. Or do you want to take, control of that? And that's, I guess, the point where we have now something that more and more over the years have been seeing, just and witnessing that our human rights are being taken away from us. Our thoughts are being taken away from us now, being controlled and manipulated. And it's what can you do to put yourself in a better position to have, live life on your terms. I've always talked about it. The slogan for B.Invested is live life on your terms. What can you do to improve your life, whether it be investing, having assets so you can take through to the other side, making sure that you've got availability to the things that you need, right? Not being stuck into a system that you can't control. As I said, try it. If you got 20 grand in the bank account, go down to your local bank and ask them, can I get the 20 grand out just for the fun of it and take it back the next day? right? And there's no financial advice for all my commie friends that like to watch and say that sometimes I give financial advice. It's just for a little fun task to do. See what they say, right? You're trying to buy a car, you're doing a renovation. I'm buying cars and renovating every day of my life, right? It's crazy. Um, what else do I have here? Do I have anything else to share with you on the news? Yes. People are looking for yields. There's an article here from news.com that came out the other day. I was waiting for it to load. It would be good if it loads for us. This article here goes to say housing market is back for buyers as loans investors have dipped. Apparently, investors have dipped out of the market. But anyway, there has been a lot of bad news in Australia recently. Ready for some good news? Our housing market is returning to something resembling normalcy in two big ways. Over the last decade, Australia's housing market has been the plaything of investors. Property became something you amass in portfolios rather than the place that you live. I take great pride in that, right? I remember when I first started going out in the media, going back in 2009, there was no such thing as someone sitting in the media going, "Hey, right, we're buying a property portfolio," right? And a lot of news articles come out now. A lot of those people I see are, you guys in the community, people that have been able to help, aid, and assist to live life on your terms and do what you want and build wealth using property. But yeah, going back years ago, if we went back to 1990s, went back to 2005, you wouldn't have seen news articles with people with large property portfolios. There's less than 18,000 people, ATO statistic, less than 18,000 people in this country which have 6 or more properties in their portfolio. And I know single-handedly that my firm, the group of companies, we've been able to play a role, and at least half of those people at some point in their journey be able to get that. And that is really cool, right? That's the strength of a community. So if we can do that, we can change the stats, we can change, human psyche of how things work and whatnot. When I see weird shit coming out and I see that there's an attack on, mindset and spirituality, like who we are as human psyche. It's a war on minds. Seeing that we can come together and be able to achieve cool things, it's exciting. So that is something that's different from 10 years ago. Time is changing. As the next two graphs show, they come from the Commonwealth Bank and they show that loans for investor housing have been crunched. I wouldn't necessarily say that. I wouldn't say that because I know this is streaming to Zinger Finance page. We have a finance company, guys. For those of you that don't know, we've written billions of dollars worth of loans over the years. We write so many loans. We're actually in the market for 5 new brokers at the moment. So we've expanded and doubled our team at Zinger Finance this year already. We doubled the team, and I'm looking to add another 5 brokers in just to keep up with demand, right? So I see stats and see curves before they occur, whether it's good or bad, right? In 2016, I said some weird and crazy stuff that, we're going to see a depression of biblical proportion, we're going to see quantitative tightening, we're going to see the dollar collapse, we're going to see hyperinflation, we're going to see interest rates go to zero, because I saw the crash before it occurred, because bad things were happening. From a business perspective, saw negativity, like there was like a wind back, right? And it was just because people wouldn't get finance. People, things were changing out there. The banks wouldn't lend. It wasn't the fact that people didn't want to buy property, it's the fact that they couldn't. We're in a world now where there's like a tsunami of people coming into the marketplace wanting to either get their first property, land. Like I had someone just last week wanting me to get them land in northwest Sydney. For those of you that know, I purchased properties for people. Going back about 4 years ago, I was picking up land, right? Developers were in trouble. When the finance market changed, I picked up land very, very cheap. And we bought it in bulk. Channel 7 did stories on it. I think news.com did stories on it. Everyone was doing stories on the fact that I was buying up all this land from the developers when they were getting themselves in trouble, which was mad. However, I think a lot of you guys, bought that land and built on as well. And looking at what's in the market at the moment, you can't get land. I was picking up land for sort of $1,000 a square meter in Sydney. You can't buy in those areas for under $1,500, $1,600 a square meter. The land, and the rates have gone up higher, right? And the land has gotten smaller. And I go around the area and think to myself, like, I've got a shed the size of the blocks of land that they're selling, and it's like, it's crazy. It's crazy. So they're saying that that investors aren't out there. I know single-handedly there's lots and lots of investors, and I know when they change monetary policy, lending policy in first quarter of 2021, we're going to see a floodgate open. Right? There's going to be a window of opportunity here. And I think I did a little chart, and I'll share that with you shortly. It's going to be a window of opportunity over the next 10 years, which is going to see massive, massive growth as they change monetary policy and allow credit to flow out, people to get access to cheap money. That will cause probably one of the biggest booms that we're ever going to see. But one comes on the other side, that could be a level of pain. So there would be a point somewhere between now and in the next 10 years that you'd want to accumulate assets, watch them get inflated, get rid of your debt. I'm excited by debt now, but I wouldn't want to own debt forever. So on that note, getting back to the story here, these were the charts from CBA and the stats. It says that the fall in investor loans was recently sparked by regulatory changes, which did. That recent change was 2016. 2016. So these guys are a bit behind the eight ball. Remember the Royal Commission into banking. That's actually what it says here, right? And I remember when the Royal Commission came out, I'm like, the Royal Commission is just a stress test of the banking industry to see how much stress that they can do, what they can tighten. They want to get into the banks and see what levers there are. But there is no Royal Commission now. All the findings from the Royal Commission, they found out all this bad stuff that happened at the bank, but that's fine. We can't do anything about it. We just need to take away all the laws that we put in place to stop that, right? Because they're screwed. The banks are screwed. The currency is screwed. The markets are screwed. Everything's screwed. The only thing they can do is just keep trying to push this market and inflate that bubble. There's a hole in the balloon. We'll just put more air into the balloon to keep refilling that balloon. Air's leaking out. We'll just keep shoving it in there. So that's great for opportunity. That's what I'm most excited about. That's what I talked about over the last 4 years. But goes on to say another reason for investors getting cold feet is prices in the biggest and most expensive cities are falling. This is the second way in which our housing market is getting more normal. The enormous differences in price between the Australian cities are eroding, right? Because maybe capital cities are rising, right? When we look at areas like Brisbane, Perth, Gold Coast, there's markets there that are rising in this country at the moment. A great evening up. Since the start of the scamdemic, prices in Melbourne and Sydney have been falling. That has dragged down the national average, and it gets all the headlines. But behind the headlines, prices in Perth, Adelaide recovered swiftly, and as the next chart shows, they are now rising. In Perth in particular, that hasn't happened for a long time, right? Let me tell you, these are charts to show what is happening, right? The data that I see is the charts before they can show that data out there. There's a lot of people going into these marketplaces. So it says here, when interest rates fall, the amount of people can borrow to buy a house goes up, and interest rates have plummeted. You can now get a home loan with an interest rate under 2%. That's completely ridiculous. Inflation is supposed to be between 2 to 3% a year. Home loan interest rates are below inflation. Is barely comprehensible to me. And this is a strange thing. The way we've got some normalcy back in our housing market is by making the borrowing conditions very much abnormal. So this actually could be a good time to buy a house as owner-occupiers seem to believe, or have the property investors actually got it right. Should we be nervous? We need to talk about interest rates. Australia's long bull market in Australia in housing has coincided with a long decline in interest rates because the houses are bought with borrowed money. The price of housing depends on the cost of borrowing. Cheaper and cheaper loans. Looks like some people here are copying what we've been talking about here for the last 9 months every Tuesday night. Looks like they finally got it. Uh, Jason Murphy is an economist. Well, it's interesting to see an articles come from him. And I've got some chats this week with the guys over at news.com because they do like to hear my stories as well. So it's going to be fun to see some of the stuff we've been talking about going out there into the marketplace also. Um, for some reason, I can't find a chart that I created, right? It wasn't a really exciting chart. It's just a screenshot with some squiggly lines on it. I'll throw it in a birch feed later. Our friends over on Instagram are watching from the phone that I have it on. Basically, my thoughts on charts we've seen, like, let's assume that we're looking at growth in most markets. Everyone looks at charts and they go, okay, we had a little dip, then we come out of the recession, we went up, then another little dip and went up, and there's little squiggly bits in between. My views on what we're starting to see, what we're going to see more of over the course of the next little while or next 10 years, is going to be more like whoop, 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 whoop. We'll see very short sort of periods where we have, an uptick and then fall down and an up, down, up, down. These things could be up, down, up, down, up. And I think we're going to see it due to the fact of money printing, currency control, manipulation of liquidity floating into the marketplace. So keep an eye out for that. We're already starting to see, like last night, the Dow Jones once again saw a negative 650 points, which going back 5 years ago, that would have been never seen before. In the GFC, the worst day of the GFC, the loss that was covered on the stock market on the Dow Jones was, I think, 750 points. Last night, no one even knows that the Dow Jones just dropped 650 points. It's not a big deal. Like, they'll send in the team tomorrow. All the commies will come in. They'll do what they need to do, push the prices back up, and we've got an artificial bubble there again. So, yeah, just what we're seeing out there. So I think that's all my news. Got some questions from you guys. If you guys do have questions and you know the number, flick it through. Flick the messages into the message boxes. Going to read some of the questions in from the community. One of the questions came through, buying investment property in this environment with rules around evicting tenants and tenants staying in properties who can't pay rent and are unable to be evicted seems an unstable investment at this point in time. You state, and I agree, that we are headed into a commie-style government. Aren't you concerned about having assets confiscated? Good question, right? That's something we talked about today. So there's two parts to that. One is the commie rules that support. Some people need support. That's cool, right? There's a government for that. They can just keep printing money, right? There's people that are everyday people, you, me, everyday sort of people that are buying assets, and allegedly tenants aren't paying rent. Let me just be really clear out there, right? Having a good property manager is worth their weight in gold, right? Over this whole period of 2020, we haven't given anybody a rent reduction, right? None of my properties have had a rent reduction. None of my investors' properties have had a rent reduction. There always is. There's a blowfly there somewhere. So what's that banging around? In all different markets, you will see that there is some straggler tenant that ain't going to pay their rent on time. There is things that go wrong. You need to minimise that. Need to have systems, processes, and procedures in place. And yeah, at Blink Property, which is my property management firm, we haven't had any tenants get a reduction. We've had a few people ask for a reduction, but when they find out the terms and conditions of the reduction, that is, very quickly taken back because they're like, I don't want to get into debt because those rent reductions that we're going through, some agents just gave them away, right? It's really really crazy to see. I've actually got um, one agent I bought three properties from 2 weeks ago. Uh, Three properties. They all had rent reductions. And the excuses are these are properties that are like $250, $270 per week rent. These tenants have been rent reduction down to $200 because of Corona. And when I look into it, it's like, why did the tenant have a rent reduction? Oh, because he's a pensioner. Well, a pensioner wouldn't be affected by not being able to go to work, right? In a positive aspect of it is that there'd be more money in the lower end of town. So a lot of our tenants have obtained a rent uh, increase or an income increase, so a wage increase. So yeah, looking at the assets when choosing the asset, it's important to sort of look at all vantage points to make sure that you're not sort of getting yourself screwed up or getting yourself into an uncomfortable position. I've always talked about the importance of having a recession-proof property portfolio. And yeah, some, and in a lot of instances, I've seen properties which have had rent increases. So last week, one of my tenants moved out of the property. It's on the Sunshine Coast. It was rented for $570 per week. Got a tenant in there for $685 before the property became vacant. Tenant paid bond and moved in. So that's over $100 a week. That's $5,000 a year. Someone's paying me with their JobKeeper. It'll find its way through the economy, right? And as you get an extra $5,000 on one property, an extra $50 or $2.5 grand on another property, right? They all add up. Right? 100 properties at $50 a week. That's $5,000 a week. That's $250,000 a year. That's some good money there. So um, that's sorry, 100 properties at $50 a week. That's $5,000. If it's 200 properties, there's $10,000. That's half a mil a year extra income. So there's the importance of having a property portfolio because strength comes in numbers and having a base position on size. It can work in reverse, and that's why it's important to understand challenges that are in the market, look at them from all different vantage points. There will be a point. None of my home loans, for example, are fixed at the moment. I've got a clear debt strategy on how I'm going to pay that off over the coming decade. I'll pay out my portfolio. I may not, but I most likely will. And I've got a plan and strategy in place on how to do that. So it's important to constantly realign yourself and go, okay, what is my debt accumulation, my debt consolidation sort of strategy on that front, and how is that portfolio going to work for you? As for what was the other part of the question that I had? Aren't you concerned about having assets confiscated? I don't believe so. I believe that there will be a need. Otherwise, all the people that are, building up, wealth. There's a lot of people that are wealthier than myself and wealthier than us in the community, which we'll be able to get through. So it's important to constantly look at how can you improve your position. What I see at the moment is that we've got, a bottom class, a middle class, and the upper class over here. The middle class, which probably makes a large part of our society, is being wiped apart, and that gap is getting wider and wider. There's becoming, less people in the middle, a few more up this end, more people down this end. The decisions that you take will mean whether you go to this end of town or this end of town. Understanding how, debt works, understanding how your assets work, understanding that you need to question everything is a start of that journey. So I'm not concerned about having them. That is why I do diversify across other asset classes. I'm not all invested in the property. It is my favorite go-to. It's worked very well for me. It's worked well for lots of people over hundreds or thousands of years, and I believe that it will continue to do so in time to come. So we're going to need to have more people come in. We're going to need to be able to house them. It's either the government pay for it or private investors. So Have you heard about the 18.6 year cycle in property, Nathan? No. Um, don't know what that is. I've heard someone say something similar beforehand about have I heard of some property cycle, which is like 18 years property cycle. Um, all these property clocks, I talked about it beforehand, all the property clocks and all those sorts of things that everyone always asks about. Uh, they're levers that are being pulled from, the financial institutions. It's currency control, it's money control, it's the amount of liquidity in the system, and will it flow into property or out of property. Going back 4 years ago, money was flowing out of property. Now there's so much money flowing around, property looks like a good option. Money's flowing into property. And that's what's going to cause the next boom. We're at the early stages of a property boom. Believe it, don't believe it, look for it, not look for it. Time will tell, common sense will prevail. People will sit back and go, wow, maybe it was the Liberal Party that put too many tax cuts in there that made the house prices rise. Oh, it was all the Asians that were coming in and buying the properties that made the house prices rise. It wasn't those things. It was monetary control, it was monetary policy, it was currency control, it was liquidity floating around and access to cheap credit. We're at a point now where if we're just giving money away as a nation, it's going to find a home somewhere. That home could be your home. So, back on the rental thing as well, I had another one which we settled 8 properties in Queensland. These properties were bought as a bulk deal off market. They were 10 years old, sold for $400,000 8 years prior. 400 grand 8 years ago. We picked them up 8 years old for $90,000. We picked them up for 90 grand. They're renting for 160 to 210. So 160 to 210, average about 180 a week. I saw a message there from Michelle. She said I had a nice haircut, but also saw a message from her and the team. And a lot of those properties that we just settled on, those rents went up from 160, 180, or 210, wherever they were, up to 260. That's sort of $50, $70, $80, $100 a week increase in rent just overnight. Where did that come from, right? Where did that come from? Is the market so bad out there? I'd be interested to hear Nathan's take on universal basic income. As a person interested in finance and social justice, would UBI to help steady the effect of hyperinflation? I can see a lot of positives of UBI socially. If property prices keep going up because of hyperinflation and negative interest rate, who will have the money to buy if people are losing their income? Please enlighten me. Mortgage stands for death contract, right? It does. Go look it up, right? Mortgage, death contract. The current currency system is to tax debt and enslave people. The more indebted people get, the more enslaved they become. And that's why society has changed. I read the article beforehand. For those of you that are joining now, go check the first part of this video. But those that were hanging around, you'll understand that when we're looking at 1990s and 2020, it was a very different social dynamic and build-up of place where we're at. And looking at, the more money that they're printing, it's just creating more enslavement for people. The people that get, and if it is it a Ponzi scheme, is the property market a Ponzi scheme? It quite well could be, right? But it's not the property market, because otherwise it'll be property, cars, as I said last week, quad bikes through the roof, Netflix through the roof. Netflix in a bubble, is it? Right? I saw this little bag of coins that are like 3p and 6p and shillings and whatnot, and crowns and florins and different coins. And I was thinking to myself, right, those things there, right, they're like 10-cent pieces, 20-cent pieces, 50-cent pieces. They used to buy a hell of a lot of stuff that you can't buy today. $20 would have seemed like a whole week's worth of income going back 50 years ago. Today it would pay your Netflix bill for the week. Who would have thought? So looking at universal basic income, universal basic income will be the cause of hyperinflation. We are in a deflationary, we're coming out of a deflationary cycle. They're throwing all these tools and resources to stop deflation. If we have deflation in our economy, we're going to see massive. We're going to see the system cave in on itself. It's going to fall faster than Tower 7, in, I better not say the word or the date, but we all remember um, the this number, this number times 2, so this number plus this number in September many years ago, nearly 20 years ago. It will fall faster than that if they don't prop this economy up. So we need something to prop the economy up. Generally, we drop interest rates, but we've got interest rates at 0% at the moment. Right? For the people that want me to clarify, it's not 100%, 0%, it's 0.25% at the RBA. So we don't have anything left in the gun unless we go negative. We go negative, we're going to see it's not really going to be effective, but it will stop the system from collapsing. But it's not going to change everything, right? So they're going to have to put more and more. As I've talked about a lot previously, if you had a football field, drop of water goes in, you don't notice it. 2 drops, if it doubles every 30 seconds. 30 seconds, 1 drop. A minute, 2 drops. A minute 30, 4 drops. 2 minutes, 8 drops. 2.5 minutes, 16 drops. 3 minutes, 32 drops, right? You see the statement. You're not going to see it, right? Until you get to the last stages when it's doubling and doubling and doubling and compounding on itself. Then you start seeing in the last 10 minutes that there's bucket loads of water coming in. Oh, I can see it down there. And suddenly the waves come in and it's like a tsunami. That is our currency and the currency creation at the moment. So universal basic income is going to be a cause of the problem. Universal basic income will be required to keep people out of poverty. So it's just a tool to keep people make people be able to afford food, basically, right? It's going to mean that you can get some food, maybe pay a little bit of rent, maybe pay a little bit of power bill, maybe put a little bit of petrol in the car, maybe put a t-shirt from Kmart or somewhere where they've made it in a third world country and it costs $10, so you can have a very basic life. However, when you start putting new measures into the market, a new sort of large amounts of currency creation, there's going to be like those last buckets that start pouring into the stadium, right? Suddenly we're going to see that just splash down. And that's going to be a big part of the hyperinflation. So, but when you do go to universal basic income, I don't think it'll be as easy as just money being given to you. I think everybody will be selling their soul for that by giving away their identity, their liberty, their freedom. They will be persuaded by going into a digital dollar, and it's when I say a digital currency, it doesn't mean like, okay, I'm sending $5 from Westpac to NAB or wherever the case may be. It will be a tracked, traced currency, and you won't be the person that gets to use it first. You will become a second-hand user of that currency that gets created. So, a couple more questions. We're heading into hyperinflation, which will pump interest rates up massively. Do you think it's a healthy thing for property investors with large amounts of debt? Cheers. Cheers. I actually noticed that Instagram is about to finish. We will end it and come back with Instagram Live in 2 seconds so they can keep watching my answers. So the question was, we're heading into hyperinflation, which will pump interest rates up massively. Do you think it's a healthy thing for property investors with large amounts of debt? If we're heading into hyperinflation, hyperinflation is caused by, the opposite, right? So we're going to be printing so much money, cheap, available credit. We've got cheap credit. You can't get any cheaper than free, right? You can. Negative interest rates. How far low? I don't think it'll go too far. -2, -3% potentially. No financial advice for all those people out there. -2 to -3%. And access to cheap credit, right? So we're taking away the laws that, allow, the banks will be just printing money and going, giving money to people, right? This free money, cheap money going to people. There will become a point. We're doing that to stave off a recession right now. There will become a point where that velocity runs rampant. We head into a hyperinflation. And for us to stave off the hyperinflation, we need to put measures in to stop out of control inflation. Generally, that inflation is controlled from pushing up interest rates. If interest rates go up um, right now, most people will go bankrupt. Right? Most people will lose their house. Not necessarily just lose their house. Businesses that have taken on debt will go bankrupt. People will go bankrupt. Countries will go bankrupt. The government will go bankrupt. And everyone would go bankrupt in that scenario. So looking at um, you know hyperinflation, I believe interest rates will go up, and they could go up to 20, 30, 40% interest rates. I think it was Turkey going back 3 years ago. Interest rate was 60%. Maybe we've got someone here from Turkey that can tell us and confirm how high the interest rate was. But I believe it went up to 60%. I certainly at that point would want to pay off my debt. But my view, just in a layman's term, what I could see happening in that point in time would be if interest rates went down to negative, we had all this currency creation, we started to see a hyperinflation occur. Central banks would change their monetary policy to try and curve and stop the hyperinflation. They would try and suck up all the liquidity in the market via pushing interest rates higher, and at that point, that's when we'd see the rates go up. But when the hyperinflation hits, a $50,000 wage could go to $500,000 to $1 million a year. People will be sitting there saying, "Oh, $1 million a year would be great. I'd love $1 million per year, right?" Well, everybody on $40,000 JobKeeper right now, you can't really buy much with that, right? The currency has changed. The $100 today ain't the $100 from 1990, and that's where we're going to see, if you think interest rates high at 50% or 60%, everything's been ravished before they go up. The 60% will be the last. It won't even be of a point in worrying about that, because there'll be other problems that have occurred prior to that. I don't think a hyperinflation will be, I seem pretty happy right now. Do I think that a hyperinflation will be happy for most people? No. But being liquid and being able to make moves and adjust and navigate and know what you're looking for through a hyperinflation, I'd like to see the opportunity to give it a run, to be able to clean up and take all the assets that I could get my hands onto during a hyperinflation scenario, because most people are scared, they don't know where to go. There will be massive opportunities, and there is massive opportunities that have occurred during 2020. So just my 2 cents on that. Our next question is, all second-hand vehicles are selling for thousands more than estimated on Red Book values. I personally sold mine, purchased 9 months ago for 27 grand, for 33 grand. Is this decreasing in value? So looking at vehicles, they are going up on a weekly basis. I store second-hand vehicles, right? I buy second-hand vehicles. Old ones, things that could be put into a time vault, right? I don't mean like anything that's crazy. Like a 1980 Corolla now sells for like 10, 15 grand. Any cars from the 80s or 70s or 80s are now, if they're in decent condition, are selling for, I remember a old Commodore that would sell for like $50, $200. A Holden Camira that would sell for like 50, $200. I used to see people sell them in the late 90s. You see the signs on the car windows, in the side of the road. Now those things that you couldn't even give away are selling for 10, 15 grand. And, it is something that's occurring more and more. And hyperinflation is something that I think we're going to see in time to come. On that note, I actually do have an event coming up. I don't, I think there's a link in the comments that's going to be in the comments section of the video. So keep an eye out for the link after the video. I'm going to be holding a webinar next Wednesday at 7 p.m. So you need to register for the webinar. It will not be on Facebook, YouTube, or Instagram. It will be a private, invite-only webinar. We are capped at only 500 people within inside that webinar. Out of It's going to go quick to get in there because everyone likes my talks on hyperinflation. I'll get some charts together. I'll get some stats together, and I'll do a very passionate chat about the pros and cons of hyperinflation, how it will occur, the phase it will occur, and all different things regarding hyperinflation. So it appears that there's lots and lots of questions about that. Um, I'll get my team to share the link in the description of wherever you're watching this video after the live. So you can click on the link, register for the webinar. If you do and get lots of value out of this, if you have a hard time explaining to your friends, family, colleagues, and loved ones, feel free to tag them in the video and make sure that they subscribe and register as well for the upcoming webinar, so they can get up to speed with where our hyperinflation is at. The webinar is 4th of November, and and I'll be discussing everything you need to know about hyperinflation. On that note, I'm going to go to some of your questions in here from this evening. I see Jesse here says, I like houses I like, all properties I like. Everyone's saying, hey everyone. Anyone getting the video? Pause. Reese, if unemployment goes up, doesn't that mean we will get deflation rather than inflation? Less people spending, less money going. Shouldn't that mean deflation? What am I missing? Good question. If unemployment goes up, you should be getting deflation. That is exactly what we should be getting. That's why I don't understand. I do understand why we are getting this scenario, but it's crazy, right? So stock markets at all-time high, property prices going up to all-time highs, everything going up to all-time high. Why is it occurring? We've talked about it. These questions are from an hour ago in here, but yes, unemployment means that we should be in deflation, but they are printing so much currency. They are making so much money. They are injecting stimulus package left, right, and center. Stuff people don't even realize. Think about this, right? We've got ourselves into $1 trillion worth of debt as a nation in 2020. 1 trillion. I always laugh when I think about it because this problem's so big. The only way they've got to get out of it is to blow the system up, right? They've got to inflate their way through it so that the debt becomes irrelevant with inflation. It was something I learned at probably the age of 13 or 14. I thought about it and I was like, debt becomes irrelevant with inflation, right? I didn't learn anything at school, but I thought about that and I was like, fuck, maybe I could teach teachers something, but it doesn't work that way. But yes, we should be seeing deflation. They're trying to stop inflation. They're trying to stop deflation, so they're printing lots and lots of money. $1 trillion has been printed this year just from the government alone. If that money goes into a bank, right? Think about fractional reserve banking. This money is going to trickle down through the economy, trickle down economics. People are going to get their hands onto some of this money. They're going to go to the bank. The bank's going to say, well, look, you've got 100 grand. You can go get a loan for $1 million. And people are going to leverage this up, and the bank's going to print even more money that we're going to see on an off-sheet balance sheet, which isn't going to be recorded like the rest of this funds are going to be put out there, and that's going to amplify things even greater. But the reason why we are seeing inflation when we should be seeing deflation is just purely due to the level of manipulation of the currency out there and stimulus packages that are coming through. From the central banks and from the government at the moment. This is happening around the world. This is not even an Australian problem. Yes, they're killing businesses. Yes, they're killing jobs, right? But they've got everybody dependent on the government. So when they do say, take my mark of the beast, take my debt trap, take my whatever I want to give to you and sell your soul to us, you'll be saying, yes, please give me some more stimulus package. I'll do whatever you ask me to at servitude. And that's what I always say, you don't want to be taken from the toughest guy on the block. The government at this point is the toughest guy on the block. You want to be able to take charge of your own personal liberty and freedom so you can live life on your terms and have freedom to do what you want, when you want, and how you want to. So, we're seeing inflation because they're printing the money, not because of production. There's less production in 2020 than ever before, but we are seeing bigger price gains and bigger inflation. This is because everyone's getting free money and they're looking to do something with it. So, wait until people realize that their money is worthless. I guess what's cool and what we'll look back on in 5, 10 years, 15 years from now is these videos. And I'm sure some people will sit there and go, Nathan looks like an idiot today, but who will look like an idiot in the future? And what I find really cool is that we've got a community of people that are free thinking and they go, shit, this is what's happening with the currency. We can see inflation happening on a day by day basis. Mass psyche. Imagine when everyone else goes, I don't want my money, I want to get rid of it. And they start getting rid of their money out and buying things, and everything starts rising in value. So it's going to be interesting to see. Um, David, thoughts on the 10-year US bond yield decreasing ever since 1981? Something to do with the removal of the gold stamps, the gold standard, perhaps, or am I missing something? David, you are 100% correct there. 100%. It's one of my most passionate things to talk about, which is the US 10-year bond. If you go and look up the US 10-year bonds, look at charts of how they've been tracking in 1 year, 5 year, 3 year, all the way back and in different sized bonds. You will see just on a chart from the 1980s to now, the dollar in the US terms has been dying since 1980, right? That was 10 years after the currency got created. The dollar, as we see, was created in 1971. So you are right there, David, 100%. You're on the right track with that front. They removed the gold standard. They could just print as much money as they want. A lot of people think, will we go back to a gold standard? I don't believe so. Why would they give up their power? They will get more death and debt into people and trap them and slave them more and more. This digital dollar mark of the beast is just another level of them screwing humanity. So you're right. It's not, and to expand upon your thoughts there, David, just with the 10-year US bond, it's not the price of anything that has gone up in value. It's the cost. It's the value of money that is bought less. So you need more dollars to buy the same goods. So it's never the property, never anything. It's the dollar that's dying. So a lot of people never ever get to yeah, acknowledge that. So you are not missing anything. The 10-year US bond yield has been decreasing since 1981. There has been times where I've got printed off charts of it and ranted on about this for ages, and everyone loves that, but I haven't got them here today. Gemma, if you're here, congrats on taking the first step and exiting the matrix. Look, guys, it's basically what I said before, and it's cool to see everyone here that's got critical free thinking for themselves and not being enslaved. Leanne, our school canteen is completely cashless. Remember at school when you used to get 5 red frogs for 5 cents or 1 cent for little things, and here we are in 2020, and we are in a really, really messed up world. If you get something for free, then you are the product. Steve, you are correct there. What is the product that we are as human beings? We are tax slaves. We are human energy, just like the Duracell battery that they showed on the Matrix. We are energy. For the ruling class, we are the cattle class. We are the slaves. We are debt slaves. We are the product. Steve, back in 2017, I managed to get some big cash out from Bendigo Bank at the end of the day, so no prob at the end of the day. Back in 2017, it's not in 2020, right? I remember the days where I would sit in a bank and I would count with the bank manager 200 grand and be able to take that and go, and it was my money. I was able to get the money, go and sit there, count it physically with them, and then take that money to another bank and settle a property because I need to help my clients. There has been times when I've had to go and get a couple of hundred grand to help someone, and I've lent them the money and physically got it as cash. But that would not happen in 2020. As a matter of fact, I've seen 2 banks close down in 2020 in my local shopping centre next to my office. One just closed the other day. And I actually took a photo of it. I think I may have posted in Birchfeed months ago and said this bank will never open again. And sure enough, here we are. 3-4 months later, they go, oh, we're temporarily closed. Any of the banks that say that we're temporarily closed are never going to open again. don't think that they're ever going to open, right? They're getting stripped out and new shops are going in there or sitting boarded up. So, yeah, banking system is very different. Um, Opinda, predictions for the Melbourne markets, thanks. Uh, I don't think we're going to see anything too crazy happen in Melbourne. I think we're going to see mass exodus of people, but they're not just going to sell their property. Like people may move from Melbourne, they might move to, a sunny place like Queensland. There's so many people, so many people moving to the Gold Coast, to Brisbane, like Perth, right? Like seeing so many people. These are all markets that I was in many years before. I didn't see people leaving and fleeing their state because they're in some communist place. Um, However, do I see the Melbourne market collapse? No, I just see it staying stable. I see that they're going to need to do a lot of things to recover from where Melbourne's at the moment. Uh, I think they'll probably start with importing more tax slaves. They can't breed quick enough to fill those holes. They will do immigration, immigrate more residents to the state, and we've got more taxpayers there. There's more of you and I that are working and doing what we're doing and paying our dues to the state, and that's what I see. Their recovery phase that they will have. There may be a slight dip. I've never been a big fan. I don't know the Melbourne market intimately that much. I just think that there's much better value out there in other states. But I don't think we're going to see a fall off the cliff moment either. Rodney, g'day Nathan. I've got a job and serviceability. I have land. Would you build income producing assets on the land with your serviceability? Depending, Rodney, I can't give financial advice. I'm just a crazy guy on the internet. But if you'd like to call my office and speak to my team, and maybe we can have a chat. I can do a map session with you potentially, and map out where you're at, where you're trying to go to, options, and be able to sort of build a way forward for you. Or I can put you in contact with someone to ask specifically on that question. But there's many variables to say. I look at building a property portfolio. The end position is the destination. The property is purely, or the asset is purely just a vehicle to get you to where you want to be. Do you need an Uber, a bus, a plane, a boat, a jet ski, a scooter, a tram, a train, a car? What do you need for the next leg of your journey? That's what's important to work out and assess what is going to get you the best mileage to get you to the end goal. So there is many variables, and it's not something I can just answer straight over the live. Well, carrying on from last question, buy more property in this growth market. Hope that makes sense. From my side of things, I've got lots of development sites. I just bought another 20,000 square meters of land in Sydney, almost at 200,000 square meters of land in Sydney. I've got lots of development sites in the other side of this. I want to be a big scale developer. You will see that from me one day in the future, just not now. Too much fun stuff going on. In this current market, I'm trying to acquire more assets. I'm trying to get my hands onto as many assets I can take through this cycle and inflate away. So I'm not actually capitalizing and building. Some of you may say, yes, I've seen you with one of your properties that you've been building, a granny flat. It's actually a kit home that I've been building, but that was something I've been working on for maybe like 12, 18 months. And it was just a little cheap project. It's going to give like a 30-40% cash on cash return per annum. But I'm more invested at the moment in acquiring new assets than developing on my existing ones. I've got 5 properties that I am going to develop in Queensland, and that's because I'm going to get an 80% cash on cash return per annum, and I'm going to double the value of my assets. So I'm going to double a sort of $3 million asset into a $6 million asset, and I'm going to double my cash flow on it, and I'm going to be using removable houses. So I'm going to be, when I get everything approved, I will spend a bit of time on the Gold Coast, and I will take videos and show you what I'm doing on the property and share that with you all. But yeah, besides that, I'm just more interested in acquiring new assets and adding to that asset base, because I know if a property boom was to occur tomorrow, if any inflation was to occur to any market, would you want to see $1 million double to 2 million, 5 million to 10 million, 10 million to 20 million, 50 million to 100 million? You'd want to take the largest asset base and double, and that's sort of where my mindset is at. Opinda, Hey Nath, next year onwards, banks' assessment criteria is changing. Will that mean that the banks will lend more now? Cheers. Yes, I believe that we're going to see from around March, April next year. It's going to be really, really fun times. There's a lot of demand there already going to the banking system, and when they remove all the barriers to entry which are holding and clogging and congesting the market at the moment, we're going to see crazy things happen. It's going to be easy, cheap, free money that's going to be printed out there, and everyone's going to be getting their hands onto it, and that's going to cause inflation into the property market like we've never seen beforehand. That's one other. Property is a tool that the policymakers and the central banks use to, it's a big ATM for people, right? It's a big ATM, and the banks know that, so they can do their part and inflate that away. So that's what I am excited about. Um, Zach is starting to invest at 40, too late. Friends and family say it's a bit late. I want to prove them wrong. I know so many people at 40 who've built really amazing and large property portfolios. Um, 40 is very young, right? I'm going to be 40 in 5 years' time, right? So it's look, I know lots of people. You're in a very good place to be at 40. I was able to retire from the workforce in 2009. I got my first full. I left school in 2002, so 7 years in the workforce. I had no silver spoon in my mouth. I wasn't born with a silver spoon in my mouth, but I will die with a silver spoon in my mouth. But I was able to do that in 7 years, be able to quit my job in the workforce. And if I could do it at 18 to 24, why can't someone do it at 40? You've probably got more capital than I had when I first started. You've probably got some equity in some property, many, many tools there. So I'd probably suggest, Zach, to flick us a message or hit up the team, send us an email at admin@binvested.com.au, or give us a call on 1300 367 925 and chat to my team about options and point you in the right direction on how you can get started on that front. So um, Lisa just said never too late, you can do it. I actually have someone that's my office manager, came to me. I think she was about 40 when I met her, and her husband, and they were able to go from just the mum, dad, two kids, um, modest income, to be able to build a portfolio of nearly 20 properties in sort of 2, 3, 4 years, and be able to have a big house to live in and all that sort of stuff. So yeah, lots of people do it. So yeah. Mel, this is a crazy question, but what would be a reason for rents to actually fall? Hope I asked that the right way. Um, yeah, what could cause rents to fall? I guess if there wasn't income coming through for people, if people didn't have jobs, if people couldn't afford to pay their rents, etc. So income, which we've seen a lot of people lose their jobs. In the top end of town, some of those rents have been heavily affected, but a lot of the properties that we work with, the sort of entry sort of level to town. If there was a recession, all right, let's assume there was a normal recession, and people couldn't afford a Lamborghini, people may dump their top end cars and go for a Toyota Camry, right? So there'd be a bigger demand for the cheaper end cars rather than the top end cars. When it comes to property, I look at the same aspects, right? There's always a demand at the cheaper end of town than there is up in the top end luxury end. So as for rents falling, maybe there could be an oversupply, so too many houses being built, which we're seeing some building happening at the moment. A lot of first owner activity, but we're already behind the eight ball about 350,000. I remember looking at an ABS statistic on a presentation I did about 4 years ago, 3, 4 years ago, which was one of the last sort of large property investing speaking gigs that I did. And we're behind at that point about 320,000 properties in the country. So, oversupply can cause rents to drop. Cheaper to buy properties than to rent them could be another reason for rents to drop. Lots of different things have caused rents to drop over the years, mainly supply and demand issues. But yeah, in capital cities, and I haven't seen rents drop. I've only seen rents increase this year. I have seen in some areas such as inner Sydney and stuff like that, rents have been affected. But rents actually fell in Sydney and a little bit in Queensland maybe 2 to 3 years ago. Since Corona, they've picked up a bit. So that's an interesting fact for the day. Michael, I'm 46, just starting with Nath. Zach, he's a legend. Get in contact with his team and you won't look back. Michael, appreciate the feedback and yeah, glad to hear that the team are doing a good job and you're liking what we're doing. And I sent you an email today, so check it out as well. It's pretty cool. Um, Leah, would you buy a 400 grand house within 15 minutes of Brisbane CBD north side, or if the house needs some work, or buy a 400 grand house further out that requires work? I guess it just comes down to what works for you, right? Like, do you have time to do the work, or don't have the time to do the work? Do you want to be in a certain location for schooling and kids and all that sort of stuff? If it's going to be an investment property, I'd probably suggest something different than that. If it was to be something to live in, that's something you need to consider. But if it's for an investment property, I'm for 400 grand, I can get a lot of value for that. So maybe buy 2 or even 3 properties on the cheap end. So, William, hi Nathan, how many millions have you got now? I want to get to billions, right? This is NV1E9 for getting to a billion. Had a goal of getting to a billion by 40. I probably don't have to do anything. Hyperinflation will all take us to be billionaires. But on a serious note, yeah, I don't even look at things in dollar terms or that. I used to go, look at how much cash flow I get and look at how many properties I got and all that sort of stuff. Bought lots of properties recently, continue to build the portfolio, net worth positions over 100 million, just keep hustling because I need to do what I need to do to get to $1 billion. So, yeah. Josh, what do you think of crypto whales traders to trade crypto for people to earn weekly, monthly profit to reinvest in the hard assets? Josh, good question. I got scammed on my second Bitcoin that I bought. I love Bitcoin, I love cryptocurrency, see a lot of value, see a lot of potential, see it as a good monetary system. And I use the word money, not currency, because I think that gold and silver could be God's money, as Kiyosaki would say, but cryptocurrency could be the people's money, and obviously dollars and currencies, the central bankers and the bankers' control mechanism to control humanity. But looking at cryptocurrencies, like when I bought my first Bitcoin, bought one, it was like $500. Bought the second one, $500. I put it into this trading bot and I lost my money. And I knew it was a scam. I don't even know why I did it, but I just wanted to see what was out there. Since then, there's been so many promises, so many guarantees that have come up, and I've seen them over the years. So many ICOs that I've invested into, which have turned to shit, and so many really good ones that have made lots and lots of money. So I guess it just comes down to what is your strategy when it comes to cryptocurrency? What is your long game for it? My investing into crypto wasn't to get a Lamborghini or to take it to the moon or whatnot. My view on it was to take some good solid assets. I'm not here recommending everything for people to go buy on crypto, but Bitcoin, Litecoin, Bitcoin Cash, Ethereum, EOS. EOS is one of my favorite ones. Not doing too much lately, but I still have good, strong confidence and faith and trust in that. Zcash. I like a lot of protocols because if we end up into this totalitarian fascist commie society that it all looks like we're going to, then you've got an ability to trade while the lights are off. So people with crypto can trade with other people with crypto and still be able to get ahead in a decentralized world, rather than being trapped and tracked and traced in a centralized world, which is where we're heading. And that's why we are streaming this to one of my other pages, which is Be Decentralized, which I haven't posted much on there probably the last sort of 6 months or 12 months apart from these videos. But I think that as for trading and bots and those trading groups and all that sort of stuff, I've never been a big fan. I've never seen anyone that's come out and made lots and lots of money from doing so. But I'm happy to be proven wrong. I have seen people make money, but they do it so often that some point they lose their money, and that's a concern on that front. Uh, Cattle prices, Adrian, cattle prices are higher than ever beforehand. Inflation, correct. You know, cattle prices, all agriculture, sort of, whether it be the tools, whether it be um, machinery, livestock, produce, has all gone up dramatically this year. And I think that you'd be a good person to understand that as well. So yeah. Um, Sam, one, thoughts on, I hope you're well. I'm good, Sam. Hope you're doing well too, bro. Thoughts on buying properties purely for getting a DA approval and then on selling for profit with the DA in place. I'm not a fan of doing those sorts of things because there is variables. What happens if the development doesn't happen? What happens if approval doesn't come through? Are you tying up capital? You're going to sell off the asset, but if inflation hits, I'd rather, let's say we buy a property. Let's say you've got no property. You buy one at the start of the year. You get it done at the middle of the year, sell it by the end of the year, you get to 2021, you've got a little bit of money in your pocket, inflation has come in, things have all gone up, so the same money doesn't buy everything, and you're sitting at the start of 2021 with no asset. So I'm about acquiring and holding on to the asset. I don't like flipping it on. I have flipped properties in the past, um, predominantly just for a reason of doing so when I acquired the asset. And I can see an actual return, renovation, etc., not from a hope and trust that a DA will come through, because anything could happen. There could be setbacks, could be variables which could make that project unprofitable, and you're stuck with a property that may not be yielding a yield that you need to hold your portfolio. So, two, what is your plans if a corona vaccine, I can't say the word, but the vaccine becomes mandatory? It's a good question. I won't be taking it. Very, very candidly, I won't be taking it. If other people wish to take it, I wish them best. I hope that they're well. I know that there's people investing in the NDIS housing that could be ready for any sort of problems that come from that way. Everyone has their view on that sort of medication and those things. I don't even know why I said the word, because it'll probably get these videos censored like they are, because they're not getting as many views and as much pull through as they used to. But I won't be having one. And if I have to get some documents signed, I'll find someone, right? I'll make sure that I still function in a world, and I won't be having people poison me. With interest rates so low, it means properties in areas in eastern suburbs in Sydney are now cash flow positive, so worth buying there, or best to stick with high yielding areas. And it just comes down to what the strategy is. There's so many things. I just did a big bulk deal in the city, and I've seen a couple of you guys in here that have been buying it as well. It's a big bulk deal that I just did in the CBD of Sydney for under a half mil or less. And when I first did the cash flow sheet, it was at a higher interest rate, and the thing has turned into neutral to positive cash flow in a city. So you're right on that front. But if those properties that were negative went to positive, what about the properties that were positive? They go to highly positive. So it just comes down to, what is the property going to do for you? Like, you need to have the strategy and the roadmap to go, okay, what what am I buying this property for? How's the property going to help me? What can I do it to? What is it going to do to help improve my position? When I acquire an asset, that's what I need to be asking myself: is how's it going to help me? There's so many properties I wish I could buy. I'd either be sitting there with analyst paralysis, not doing anything, or I'd be buying the wrong properties and jamming myself up. The reason why I've got so many properties is due to the fact that I've bought properties in line with understanding what I need from a finance perspective, what I need for a growth perspective, what I need from a cash flow perspective. And that's why there's a big difference between 1 or 2 or 10 or 20 properties. So the property is a byproduct of what we need to get to our goals. But why we're buying that property is what's crucial. I'd buy all the properties if I could, but I couldn't, because finance is the ultimate hurdle to overcome. Frank, thoughts on growth in regional Ballarat and Geelong? There could be growth. time will tell. Time will tell. Time will tell. I think more so than Ballarat and Geelong. Um, there's a lot of areas that have seen tremendous growth this year. I know firsthand there's some markets that I've bought into which have had 100% growth this year. You can buy regional areas that are much cheaper than that in other locations around the state, and even more inner city uh, locations in capital cities, which will see good capital growth as well. So I'm not too sure on that, Frank. So sorry about that. Daniel, what is your call on the RBA rate next week? I will give you my thoughts on the rate cut next week. Um, I've got this right every month up until March this year for the last 10, 12 years. Um, what I used to go by doesn't work anymore. And that was looking at the 30-day interbank cash rate future implied yield curve. And that is showing that we would have a rate cut. It also would have shown that we'd have a rate cut in the month of October 2020, but we don't have it. And I think the reason being is that they're artificially holding the rates at a certain level. I think they should be much lower, but just because of the system at the moment. I talked about this about a year ago. We're at a Y2K bug moment where the system can't support a negative interest rate. Once we do go to negative, I think we'll go quite quickly, quite low below negative. If you ask my thought, everything's pointing at a 0% rate cut next week. We'll see a 25 basis point rate cut, and we'll head down to zero. But the chance of it happening is probably none. But it will be interesting to see. We are ready for the rate cut to zero. We are at zero. In technical terms, we are already at zero. Tamim, hey Nathan, what's your thoughts? Purchase houses or apartments to start a portfolio with growth of houses more than apartments due to land component. In my portfolio of houses, units, townhouses, villas, blocks of units, commercial, I started with the view that houses go up and units don't. But if that's the case, go to your local area, look at what houses sell for, what units sell for, and what they used to sell for. Houses don't go up more than units. Right? In most circumstances, they go up in line with each other in lockstep. My portfolio consists of about 50% strata properties, units, townhouses, villas, etc., and probably about 25% houses and about 25% land banking and commercial sort of properties. Laura from Instagram, thoughts on Manly Vale seems to be the only suburb in the southern end of the northern beaches that hasn't gone up. I look at the bigger end of the market, and then the micro markets. There's opportunities within them. I'm not all that familiar with what's happening in Manly Vale at the moment. Don't have a feedback on that one. If it's cheaper than all the other surrounding suburbs, maybe there's some value there, some regentrification. I love going to areas that are gridlocked by higher price properties, picking up in there, and then all the neighbours come in. They go, look, this is too good of value. They move in, and then the prices rise on that front. So it could be something worthwhile looking at, but I'm not all that familiar in that market. So yeah. Just notice that I've got a jet shortly, but just the last couple of questions. Tommy, good evening, champion. There's a great talk that the government will forgive debt before the reset, and as a result, they'll require people's assets, leading to no ownership of properties. Your thought and any truth to this? I hope you're well, bud. I'm doing awesome, mate. Thanking you. Hopefully, you're doing well. I don't think that's going to be the case. Maybe some people, maybe that might be an option. People will walk through this. There's so many people with so much value, right? They're not going to walk away from their assets. There's so many people that don't have any debt. So it will be interesting to see how we go through this point in humanity. That's why I think it's important to have a holistic approach and having ballast there to be able to get out and understanding how you're going to acquire the debt, but how you're going to pay off the debt at the same token. Andrea, I saw that you posted the video of houses versus units. Thanking you. Um, Tracy, Melbourne has shown all their cards. Do you see a mass exodus happening there? No, I don't think we'll see it be a mass exodus, but most people are they've been obeying that they'll stay in their house, right? So, I think a lot of people have their communities there, they have their families there, they're just going to get on with their life, and that's going to be it. But there will be a lot of people that go, stuff this, I'm not putting up with this, I'm going to move to a better place, and it will encourage people to jump the border and go to a different location. Um, Chew, hey Nathan, what's your thought on the Redcliffe or Deception Bay in Queensland? I like it, I see growth, but I wouldn't go running to Deception Bay or Redcliffe just for the fun of it. I bought a few properties around there this year for about 220,000, 230,000. Bought a couple of blocks of units there as well. But it's okay, but I wouldn't go running it as Um, got so many questions here. Tracy, do you mentor for students in New Zealand? I don't have a mentoring program specifically for New Zealand. However, I do have a mentoring program that I put out about 2 years ago now. Half of it is evergreen, so there's always the information on how to negotiate, how to locate properties, negotiate properties, how to get goal setting right, how to get mindset right, how to set up a finance team, what to look at from a accountancy perspective, etc., etc. That could be well placed for you to be able to add those skills to your portfolio. So reach out at the team if you want to check that out. I think it's a few $1,000s for the mentoring program. Reach out to the team. Sam, latest data from APRA says 1 in 11 mortgages are in deferral with JobKeeper potential ending in March. Does this mean potential for a serious price drop? They will not allow the price drop to occur. I think that we can all see by now that that they're doing everything to prop up this system. It is a Ponzi scheme we're living in. We are living in a controlled environment. Will we see JobKeeper end and everything fall off a cliff? I think they are now stuck by giving the stimulus packages. Like you've given in once, now you're stuck. You just have to keep doing it to keep it feeding the beast and keeping it alive, because the ramifications of keep feeding that beast outweighs the ramifications of not feeding it and letting the whole thing implode. So it's going to be an exciting time. It's very, very exciting, and I'm very, really excited to be alive at this point in time. On that note, I do see that my team have popped the link up in Facebook. Register to the link. Go into the comment section. There's a link there for the webinar for the 4th of November, where I will be talking about the hyperinflation that's upcoming is inevitable. They're gone beyond saving this, and we have to go into a hyperinflation. Will that mean that we have a hyperinflation today? No, it doesn't mean that it's going to be today. But in this decade, will we see a hyperinflation? What will be the benefits of it? What are the risks of it? I'll be covering all of that in the upcoming webinar on the 4th of November. Register your interest on that. If you aren't on Birchfeed already, go to birchfeed.com. The link is in the description of this video. Birchfeed.com is free. It's daily content. You can get yourself brainwashed from watching TV. You can educate yourself, looking at what other people are doing and what they're saying and all that sort of stuff. So on that note, thanks for watching. If you need help, whether it be from finance, managing your portfolio, getting strategy on your portfolio, finance, purchasing properties, whatnot, feel free to reach out to my team. We're here to help. Admin at B.Invested.com.au. Call us 1300 367 925. Thanks for watching, guys. We'll catch up soon. Bye for now.